Welcome to Informed Investor. In a surprising regulatory move, the Reserve Bank of India has barred the country's biggest non-banking financial company, which is Bajaj Finance, from sanctioning and dispersing loans through two of its digital products, which is eCOM and Insta EMI Card, with immediate effect. So why did RBI enforce the ban? The action was taken by RBI as Bajaj Finance did not meet its digital lending guidelines, which primarily include failure on the issuance of the key fact statement to borrowers. KFS or Key Financial Statement is a statement containing information on 15 parameters including loan amount, annual percentage rate, breakup of all the cost to borrower and recovery mechanism, among others. The second reason was deficiencies in KFS already issued on other digital loans that have been sanctioned. In context, the RBI had issued digital lending guidelines on August 10, 2022 to regulate digital lending to protect borrowers and crack down on the growing number of frauds and unlawful activities within the sector. And as a result, Bajaj Finance witnessed some selling yesterday on the back of the statement released by RBI curbing the finance company to stop advancing loans. Bajaj Finance said it will undertake a detailed review and implement requisite action, and until then it will suspend the sanctioning and dispersal of new loans under the digital segment. Digital lending has come under the scanner of the RBI with the rapid increase of unauthorized loan applications and defaults on low-value digital loans. The banning of digital loans by Bajaj Finance marks the first major action taken by the central bank under its digital lending guidelines introduced a year ago. Previously as well, RBI barred American Express and MasterCard from issuing cards for not localizing data. HDFC Bank too was disallowed temporarily from onboarding new card holders and introducing new digital services until it fixed its online outages. And recently, Bank of Baroda was barred from onboarding new customers to its mobile app BOB or Bob World, as it wrongfully linked bank accounts to mobile numbers of different people to increase the number of downloads and registrations on the app. All in all, the RBI's action is likely to have a positive impact on the digital lending industry as a whole. By taking action against Bajaj Finance, the RBI is sending a clear message that it will not tolerate non-compliance with its guidelines. This is likely to encourage other digital lenders to tighten their compliance procedures and ensure that they operate in a responsible manner. India's stock market is poised for a significant boost as the MSCI Index, a leading global index provider, is set to increase the country's representation in its emerging markets gauge to a record high. This move is expected to trigger net inflows of up to $1.5 billion into the Indian equities, further fueling the nation's economic growth and investment appeal. The MSCI Emerging Markets Index is a stock market index that tracks the performance of large and mid-cap companies in emerging markets around the world. It is one of the most widely followed benchmarks for emerging market performance. As of now, it tracks across 24 emerging market countries. So what is the latest update? India's representation in the MSCI Emerging Markets Index has increased to 131 stocks, the highest ever. This is a significant development for the Indian stock market and is expected to attract as much as $1.5 billion in inflows. To put this in perspective, the MSCI India has impressively outperformed other emerging markets and has amassed more than $12 billion into Indian equities so far in 2023, making it one of the preferred destinations for investors. From a mere 9% weight in MSCI Emerging Markets Index, in Jan 2020, India has emerged as a powerhouse in the past few years, with the latest reading coming in at 15.88%. The increase in India's weight in the MSCI EM Index is due to a number of factors, including the country's strong economic growth, improving corporate earnings, and attractive valuations. This is likely to lead to an increased foreign investment in Indian stocks, which could further boost the market. Overall, the increase in India's representation in the MSCI EM Index is a positive development for the Indian stock market. Having said that, this is me, Rahul Hassan, signing off. Have a great day and stay safe.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com